Hello, Investing Putts back with you again. Sorry it's taken me so long to make another video. I've been kind of backing up a little bit and reevaluating my mental model for trading. What's driven this is not so much that the market is corrected, but implied volatility is extremely low right now. So your blind premium selling strategies like the wheel, covered call, covered cash secured put selling, they don't just work out of the box. You're not getting good premiums and you're not being rewarded for the risk that you're taking. So I'm, rather than being just blindly bullish on every stock, I go and I make a directional call, both a long-term directional call and a short-term directional call. Rather than, if you're trading the wheel, you are implicitly making a bullish directional call. Well, I feel like with premiums being kind of low, I can't afford just to blindly make a single directional call. So anyway, if I make my call and IV is low, then I'm going to trade the poor man's covered call or put. If the IV is high, like it is on Usdl, I don't really want to hold a long stock position on Usdl, so I'm trading spreads and iron condors. When the stock breaks out, so the good thing about making a call is you make the call, then you watch the stock price evolve, and then when it breaks out from your assumption, you can reevaluate your directional call and switch directions if need be. So because of the low IV, I've switched from the wheel to the poor man's covered call, poor man's covered put on almost all my positions. You can buy these long dated options for really cheap, and why tie up all your buying power with long stock? Here's my portfolio. I'm doing okay. I'm keeping up with the market, so that's good. I'm not blowing things out of the water, but I'm going to go through each of my positions quickly just to kind of affirm my directional status at the current time. Occidental Petroleum, Oxy, it's been for the last 4 months, but in a nice steady upward climb, but it's broken out aggressively to the downside because the price of oil has been somewhat unstable to the downside. The way I see it, rather than just blindly saying I am bullish on oil, and over a 12-month time frame, 24-month time frame, I'm bullish on oil. But yet, if I just blindly took that bullish assumption and traded the wheel the whole time, I'd be able to make money selling covered calls in times like this when the stock's headed steadily downward. But I'm okay making a short-term directional assumption. So I'm trading the poor man's covered put on Oxy right now. I'm going to make money selling covered puts, and my long put is going to increase in value the more it goes down. When it sort of breaks out of this downward trend, I can change back to a poor man's covered call and do so at an attractive cost basis. So I'm not afraid to take both sides of the trade. Schlumberger, the world's largest oil services company, it's the same general stock trend as Oxy, and I'm also trading the poor man's covered put presently on Schlumberger. First Majestic Silver, I'm bullish on precious metals, though it's been in the last month or so, it's a couple months, it's been kind of a rough ride for silver. And the question is, are we in a short-term downward trend? Or are we still in a longer-term upward trend? I still am bullish on silver, and I'm going to continue. I'm trading the poor man's covered call, even though it's been kind of trending downward since February. I am comfortable staying bullish. If you look at the gold miner ETF GDX, it was been in a steady downward trend since August, so 8 months of steady downward trend. It's broken out of that trend pretty aggressively to the upside. I think that's real, and I'm long-term bullish on gold, and I'm short-term bullish on gold. So I'm trading the poor man's covered call. TLT, which is the 20-year bond ETF, very similar behavior to gold in the last year. After having a huge run around the COVID time, pre-COVID time, it's been way down with some panic selling since February. I feel like the panic selling was kind of overdone, and I made a long bet on about March 15th, I guess it was. So so far I've been proven correct. TLT is marching nicely upward. It seems to have definitely broken out of its downward trend. So I'm trading the poor man's covered call. Usdl is one that over the last 6 months has been dominantly going steadily upward. So am I bullish on Usdl? I don't know. I think it's the other stocks that I am bullish on. They're usually value stocks. This is not a value stock. It's got negative earnings. It's up like 250% since COVID, but yet it keeps marching upward. So it's bullish, but I'm kind of non-committal. I don't want to own the stock. So I'm trading right now. I'm trading an iron condor. I think the wings in the iron condor go from I think 26 to 28 and 20 to 18, something like that. So I'm not collecting a lot of. I'm kind of collecting 1% premium per spread roughly, but I'm not taking a lot of risk with these. Intel's an interesting one. A very interesting stock chart. Intel just had an earnings. I'm trading the poor man's covered call. I'm bullish on Intel. It's a value stock, and I think it's a safe haven. But with this latest earnings call, it's broken downward definitively out of its upward trending price channel over the last 4 or 5 months. But it kind of seems to be a repeating pattern. You get a big bullish lead up to earnings, and then a huge drop in earnings, and then it keeps marching up. So I'm okay taking kind of a long-term bullish call on Intel, and we'll see what happens. Dish Network is interesting. It's been kind of a quiet stock, decent premiums, but not great. It's been kind of in a price channel for the last 8 months or so, but it's broke out recently. They announced a 5G deal with Amazon, so that shot the price up quite a lot. Walgreens, another is kind of my retail exposure. Not much to say. I think it's in a pretty consistent upward trend. It has its range, and I'm dominantly bullish on it. Uranium is it's kind of a weird situation. It's a commodity, but yet it's sort of a Green New Deal type commodity, because we're obviously if we're gonna switch to an electrified economy, well, you're gonna need nuclear power whether you like it or not. So it's been in a nice steady upward trend for the last 4 months or so. It's broken out a little bit to the downside, but I still maintain my bullish assumption on Cameco. Weight Watchers is one that's pretty volatile stock, so you get pretty good premiums on it, but man, it's punished me. I just haven't figured out how to trade it. Seems to trade in kind of this consistent range for the last 6 months or so. So it does have earnings coming up. We'll see what happens, but I'm maintaining a general bullish assumption on Weight Watchers. Wells Fargo, it's my only financial exposure. I like it. It's been, man, what a run it's had here, and so I'm bullish on Wells Fargo and trading the poor man's covered call.